welcome, Jonathan, also known as Jono. Jono, you're the CEO of WisdomTree, which is one of the largest ETF managers in the world. It's really exciting to have you here as a part of our community. Welcome.
Thank you.
First and foremost. What you've done has been extremely impressive in the crypto space and in more traditional finance space. You were one of the first companies to get ETPs to market. But you didn't do it here because of reasons I think are obvious. But talk a little bit about your crypto, Bitcoin, digital asset, ETP timeline and journey, where you launched initially, and then a little bit about being a part of that initial set of spot Bitcoin ETF issuers here in the United States.
Sure. So, well, thank you for having me. So WisdomTree, we manage about $109 billion of transparent exposures, and we have a very large commodity franchise in Europe. In Europe, the regulators allowed you to launch crypto earlier, so WisdomTree launched Bitcoin and other crypto exposures at the end of 2018, early 2019. Now, for me, I wasn't an evangelist of Bitcoin. For me, I wasn't romanticizing it or villainizing it, but what ETFs do is make difficult things to trade easy and convenient and compliant. So it was just easy to do. There was demand for it. There was very little competition back then. So we did that. Then, as you get ready to launch, you have to understand storage of crypto. You have to understand what is the investment objective. Why would it be of interest to investors? One of the very earliest observations that I had was the blockchain. If Bitcoin is a use case on the blockchain, it's an extraordinarily powerful platform for capital markets, that you can go from 0 to $1 trillion without any institutional support means that the blockchain is immensely efficient new rail. I saw that. We then filed for the US in 2019, and obviously they didn't allow us to launch for a few years. The regulators in the United States, the SEC in particular, very uncomfortable with Bitcoin. That said, it's just an exposure. It's not good or bad. And with the right oversight, custody, and disclosure, it's just like investing in gold. It's no different at all. So yes, we did launch in this year as part of the 11 firms that got approved on the same day. But in addition, WisdomTree is taking sort of an aggressive stance to digital assets, blockchain in general. We've launched WisdomTree Prime, which is our mobile app for investing, savings, and payments. We've invested in infrastructure, a company that we sold recently to DTCC, so a blockchain infrastructure company. We've also invested in a company called Finality, which is doing central bank digital currencies on the blockchain. It's a consortium of 20 of the largest global banks. What all you can say about the US launch is it's an extremely important milestone on this journey of normalizing the asset class, as well as bringing things onto the blockchain in general. And so I think it's very, very constructive. Still, almost all of the money is retail, which is interesting. Even with BlackRock's great success, almost all that money is retail. There's just inherent demand. Usually, in investing, retail gets the last look. Here, they've gotten the lion's share of the benefit of a $60,000 coin, which is nice for retail to be a winner.
Is there anything else you can tell us about the investors in spot Bitcoin ETFs?
all investors want the same thing. This is better returns with less risk, right? That's pretty much what investing is. There definitely is a growing desire for alternatives to fiat because of the debasement. So it was a very well-constructed Bitcoin exposure, having limited supply. It's really worked beautifully. In fact, if you think about the 1 year, 3 year, 5 year, 10 year, and 15-year return on Bitcoin, it is the best performing asset class. So that alone is how that drives money, that drives investors. It's done better than private equity. I'm expecting the next wave will be institutional money to come in.
It was quite a feat to get spot Bitcoin ETFs across the finish line here in the United States, despite the fact that many other countries had moved forward, many other countries you guys were operating in, offering products and services to. It was a 10-year journey. It took 10 years from the time the very first company had filed an application to bring spot Bitcoin ETFs. That was the Winklevoss twin in 20, I think it was actually 2013, so it was a little bit more than 10 years. And they finally got approved this year, and we agree that this is a huge moment for our space because now you can buy regulated, SEC-regulated Bitcoin products. Investors, including and particularly retail investors, can invest with the protection of the investor protection laws. And do so in a way that is going to, you said, normalize the asset class. I think so, because ETFs are one of the most popular and well known and used investment products of the past 30 years. But it allows a different type of class and constituency of people to have access to this technology. Our community has always, it came from a very small community of people who are probably ideologically aligned with the technology, and bringing this to a much more broader base of people is an important part of bringing ETFs into this space. I think it's really interesting that you shared something that I like to remind people, which is Bitcoin is the best performing asset class in the world. Just looking at the numbers, and and why is that? You have that limited supply, and one of the challenges that I feel most younger generations have is keeping up with what's happening in the economy today with inflation. If you go on TikTok or social media and you see post after post, it's like a trend right now where young people will talk about how they're just struggling to survive. Even though they're working a full-time job, they may be working multiple jobs, they don't feel like they're going to have the same opportunities as their parents to make ends meet. And a big piece of that is because of the money. And you mentioned Bitcoin having that limited supply. I'd love just to hear a little bit more about how you think about that and how Bitcoin can serve a real world purpose for people here in the United States.
Well, I would say that if you have diverse portfolios, if you looked at at the research that we're doing out of our European operation, talking to not just retail investors but institutional investors, if you take every liquid asset and just add up all the market caps of all of them, bonds, equities, commodities, everything that's trading on an exchange, Bitcoin would get in a beta portfolio somewhere about a 1.5% allocation. So if you're not allocating at all, you're making an active decision not to allocate to the asset class. My guess is, now, most people are not Jack Bogle taking a perfect market cap weight to the world. There will be many that are well overweight, the 1 or 2%, and it's a volatile asset class. So yes,
are you calling me overweight?
Not at all. I would never do that. But it is a very volatile asset, and so what I will say is I've certainly in my 20 years at WisdomTree, I have not seen anywhere else the passion that the crypto enthusiasts have for that asset it overwhelms gold bugs. It overwhelms dividend-paying security passion. I mean, there's a real passion
What's
here.
it like in your marketing team or in your internal teams as you guys are seeing the community engage with you guys? What kind of talks are you guys having in the boardrooms?
I mean, first of all, again, we're very diverse. So we're again, we didn't come at this as pure Bitcoin enthusiasts. We offer such a wide, diverse group of asset classes. But you haven't seen this kind, well, it's not easy to see anything that goes up as much as Bitcoin, and investors chase returns. You have to be, what's interesting, they hated it at 16,000, they love it at 60, right?
Everyone gets the price they deserve.
Well, it's not easy to be Warren Buffett, right? Where you buy low and sell high.
But he's not buying Bitcoin.
No, he isn't. But he is like Apple's largest share.
But he was buying Apple very high. He was buying Amazon. He missed the entire...
He missed a lot of it, but he made a lot of it. And it's not so easy. And you have to do it over cycles. Anyone can catch one wave. Can you catch the turn and make this a sustainable thing? Investing is, obviously, it's not a one-day thing. You have to, you talk about young people trying to get ahead. You want your money to work for you.
Yeah.
And if you are putting your money to work properly, it's just one of the great lessons in life. Otherwise, you have to work really, really hard if your money isn't working for you.
And everyone should have the opportunity to work hard, save, invest, create value for their families. I mean, that's why I think so many people have drawn to the United States, because of the opportunity to do just that. And our financial markets are the backbone of that opportunity. Let's switch gears into kind of where this is going. So we've talked about spot crypto ETFs. Let's talk about DeFi. This is an area where you guys, and you personally, have put a tremendous amount of thought. And you guys are really looking at it from the perspective of what you call responsible DeFi. What do you mean by that?
So when you think about Bitcoin originally, it was to avoid taxes, to avoid compliance, to not have custody. You would do self-custody, so no interactions. That doesn't work in regulated financial services. Regulated financial services requires speed bumps, compliance. There have to be on-ramps and off-ramps to custody or things of that nature. What we're trying to do is offer some of the benefits of what is DeFi. So I believe in the future, peer-to-peer exchange of value, all value, will be commonplace. Go back to your iPhone or your smartphone. Who would have imagined, maybe Steve Jobs, that everyone in the world is taking so many pictures and you can send your pictures anywhere in the world? That is going to happen as well with money. Yeah. I'm very bullish in the sense that regulators are falling into line. Things are happening, whether it's the Bitcoin approvals, whether it's central bank digital currencies. So the sterling went live last year on the blockchain. My guess is it'll be in the US in 2025. That rail of blockchain as a financial service rail, it's not easy in our industry, financial services, to innovate. We have spent money without knowing for sure that you would actually get the approvals. So last year, one of the things that we've done, we got through the SEC blockchain-enabled funds. So treasuries, gold, treasuries and equities through the SEC, where we got interoperability on open chains. So through the SEC, through our regulatory approval. So the 40 Act is on the blockchain. That was a multi-year journey that I think is necessary if you're going to see, if you want to see responsible DeFi. One of that is Bitcoin needs to be normalized with other assets other asset classes and services. And it is happening, but it's like 2 steps forward, 1 step back. There's still so much skittishness through with the regulators and with regulated financial services. And it depends on who your regulator is. If you're coming from, let's put WisdomTree aside and you take some of the biggest. You have Jamie Dimon on one side, you have Larry Fink on another. Larry Fink is much more bullish on crypto. Part of it, I think, is because he, like WisdomTree, our regulator are different. It's more the SEC than the OCC. And that makes a big difference on whether you're going to be allowing crypto to touch your infrastructure or not.
Right, the commingling of the banking system with digital assets, which this administration has been extremely clear they want no commingling at all. They're really discouraging, doing everything they can to keep the banks from touching digital assets. So very different as an SEC-regulated entity.
You'll get unintended consequences. Right now, banks have given up a lot of lending to alternative asset managers since 2008. If they're not careful, blockchain-enabled finance, the banks will be last if they're not careful. And that means there'll be newspaper companies.
When you say be careful of being last, or be careful of...
The regulators, so Gary Gensler, obviously he had discomfort with Bitcoin. That said, what he got was not what he expected. He held 11 of us to launch on the same day so that 11 firms could say, we were first. So do you think it was his intention that there would be more Bitcoin ETPs in the US than S&P 500 ETFs? I don't think that's what he intended here. But by forcing them, WisdomTree to delay for a few years before we could launch, lots of other people could launch. And so it launched as a very mature asset class, which is not normal. It broke the norm. That wasn't what he intended. What I love about what I'm seeing on central bank digital currencies coming onto the blockchain, it gives weight to the big financial institutions to get onto the blockchain. You're fighting 2 things. One is regulation. The other is your legacy business. And it's not a surprise that ETFs, none of the big ETF managers came from the active mutual funds. They viewed it as competitive to what they were doing instead of, it's very easy to put yourself in a very narrow bucket and miss the bigger picture. Why WisdomTree is sitting here in digital assets as an early leader is I didn't want to be a newspaper company that missed the internet because they should have been the ones to catch it. They owned the news, they owned the consumer, but they had a very narrow view of their relationship to information and the customer. And today there's almost no newspapers. Where I think we are, and I'm very bullish that you're going to see around crypto and digital assets, we're moving towards our TV moment. I'm 60. Who would have thought that you would not have to sit home at, on a Thursday at 8 p.m. to watch your show? It wasn't, TV seemed to work fine for me, but it's completely changed. We haven't seen that yet in financial services or money. My guess is things like instant settlement, peer-to-peer exchange of value, greater control of all of your resources is coming, but it comes through a combination of technologies. A lot of it is on the blockchain, but it's also mobility and things like that and smart contracts, and there'll be elements of AI in it, but a lot is coming that we're really at the birth of. It's very, very exciting.
You make such a good point, and one of the things that I talk about, particularly in working with members of Congress, policymakers, when they say, well, why is Bitcoin needed? Or why do we need this technology of the blockchain? Because we already have digital payments. Money's always already digital, or we have electronic payments. So like, what exactly like is this? And it's this technological feat of a digital bearer instrument of peer-to-peer payments, where the payment is the settlement. It's instantaneous. And you talk about the internet and how newspaper companies went out of business, or how Encyclopedia Britannica, used to be a giant, used to be one of the largest holdings in Warren Buffett's portfolio, and now it's been obviated by internet technology. The financial services industry largely was essentially put on top of the internet. The internet didn't change it in the way that you're speaking. The rails weren't innovated on. It was kind of similar as taking like the front page of a newspaper, taking a PDF of that, and then putting that on a website and saying we have an internet strategy. It's like you didn't change the inner workings. So that's why the innovation, the technical feat of what Bitcoin is so instrumental for the financial services space, because it's gonna change the plumbing, and that's I think that's exactly your point.
Well, I would say what isn't normal, it's your money. You have a bank account here, you have a brokerage account here, you have a credit card here, but none of those accounts talk to each other. That's just the way it grew up in regulation. Now, today, every mobile banking or mobile financial services is very well known and established, particularly outside the US, but growing very quickly. Everyone has a smooth user interface that makes it look like it's seamless. But really, nobody has done the hard work of the middle and the back office to really get you talked about payments. Well, you put money into your bank and you want to then spend it. It's called the float. They sit on it for a couple of days before you have access to your money.
There's a very complex system going on behind the scenes that most of us don't see.
Exactly. The rest of the world needs to get, why should Bitcoin settle so much better than other asset classes? Gold and Bitcoin are under the same commodity regime. Gold, tokenized, physically backed gold, travels as smoothly across the world as Bitcoin does. Still physically backed, so it does have an intermediary, but it is, there's no reason that it can't be as smooth. So I'm expecting that you're going to see a resurgent. WisdomTree, we manage about $13 billion in gold. You sometimes hear Bitcoin being referred to as digital gold. No, there is digital gold. Bitcoin is different. Both have a role, and let the investor choose.
Let the market decide. Yeah, absolutely. Back onto the DeFi topic, because I think it's really interesting how you guys are embracing this concept of DeFi, and you're looking to work this into your offerings. You've made some speeches and some statements and some writings over the past couple of years where you talk about how you're embracing this concept of DeFi, and you think it can completely change the company of WisdomTree in the long term. Can you talk about that? What are you guys building that you can share? Where do you see WisdomTree becoming in its next era, its next epoch?
So, when I actually was a media company back in, and WisdomTree was a media company called Individual Investor Group. And in 1997, I did a story on ETFs when the wrapper only had $40 billion in assets. And so I pivoted the firm to be an asset manager because I saw that the exchange-traded fund, liquid, transparent, tax-efficient, and convenient, would transform asset management. The exposures got bigger and better and easier and cheaper to use. For the last 5 years, internally, we've been asking what could do to ETFs what ETFs did to mutual funds, and we got a sense that it could potentially be tokenization on the blockchain, but it's not as simple as just putting out a token. we've gotten different licenses as a business, money movement licenses. We just received our New York trust license. I just take something as simple. Before ETFs, no one really invested in gold. It was just too difficult. You might buy gold coins, but that's all you could do. Here, you could see gold becoming as important as it was centuries ago, as the height of currency. That's the peer-to-peer element of gold tied to a debit card. You could do the same thing with your Bitcoin. So, I used to say the mutual fund is a black and white TV. In the 21st century, that's not going to win. Same thing about the savings account. We're trying to offer the services that you use as consumers, but make them better. And this is really this DeFi, you having control of your money, using your wallet, making payments, sending gold or funds, a money market fund. Why should only dollars travel smoothly? We're going to see all of this evolve over time, the way you can send photos of all of your family, not just your wife or your child, right? Everything should be able to move. It requires getting things like know your customer, anti-money laundering. You have to own those foundational principles. But if you stay within the foundational principles of regulated finance, there is room to innovate. So we've been working very closely with regulators for like 4 years to get to this point, and I see movement. It's not easy movement, but I'm seeing movement, and I see, it's like building on your ATM card, right? When was the last time you actually saw a teller at the bank? It's been decades, probably. But there were people that, I want to see my teller. I want to make sure my check gets deposited. Or when the internet came up, people would say, I don't use email. So what happened? Bye-bye. Nobody talks to you anymore. It became
Unless
too
you're
convenient.
a member of the U.S. Senate, you have people that do that for you.
That's then you fall behind and you don't have a feel for what's going on.
That's we're working.
The regulator is not going to be first. There's no question about it. So business, for the sake of their consumer, is going to have to move it forward. And move it forward, again, for us, it's what would be best for the consumer. Can you make a better experience? If you can make a better experience, at the end of the day, the customer will be there. And, so go back to our experience on ETFs. I did that story in '97. Before there was an iShares, before there was Vanguard, there were only 3 ETFs with 40 billion of assets in the wrapper. Today you have 10 trillion because it's in the interest of everybody to have liquid and transparent exposures. This is very powerful technology. These rails, blockchain rail is too powerful to be ignored, and you have a new exposure. When I look at Bitcoin similar to, say, high-yield bonds. It used to be, that company isn't worthy to borrow. It was almost discriminatory. Only the richest could borrow. It's definitely, this is part of this evolution but it makes it hard to understand. There's the asset class crypto, and then there's the underlying technology, and the technology can be used to do regulated or what we call responsible DeFi, to give you the benefits of DeFi, but in a way that won't run afoul of the foundational principles of regulation. That's all we're trying to do. But I think we're well on that journey, and I'm optimistic that it'll start changing the lives of consumers going forward.
Thank you. We've got just a couple moments left, just to wrap it up. You've mentioned CBDCs, you've mentioned DeFi, you've mentioned tokenizing real-world assets. How are you thinking about stablecoins?
So we have a tokenized money market fund, which the SEC would say don't call it a stable coin, but a money market fund. Stable NAV is a stable coin. right now, when you say stablecoin, it means it's going to hold that dollar price is really what it means. So I would say gold, even though it is net asset value, meaning if you had $10 of gold, it's $10, but it moves. So it's not a stable coin. The dollar is the basis of most stable coins. The benefit goes to those that are issuing the stable coin. All of the interest that underlies the stable coin goes to the benefit of the sponsor. With our money market fund, you get a stable NAV. We turn the business model on its head. The consumer gets the interest. That money market fund, which could be called a stable coin, tied to a debit card, looks extremely similar to your savings account, except that little WisdomTree, with our 300 global employees, we're offering something like a 5.25% yield today, and Bank of America and JP Morgan are significantly less. That kind of, now we won't be FDIC insured as a savings account, so some people might prefer the FDIC insurance. Many will prefer the hundreds and hundreds of basis points of more money. But stable coins are valuable because they travel smoothly, the dollar, through regulatory regimes. But the benefit goes to the sponsor. I think that there's going to be real change there, and the consumer is going to get a lot more benefit from it. I'm very excited. I mean, we think that, well, the stable coin, the money market fund, the savings account, there's a blurring of words. When is something an investment? When is it savings? You might say your Bitcoin is savings, so for somebody else it's investment, right? We're trying to not get caught up on the words. We're trying to get caught up, focus on the experience. What are you trying to accomplish? And then can we make that better? So I'm very, very bullish on, we will have a dollar business, but in the WisdomTree ecosystem, I'm not sure that's the best use of your money. In fact, when you think about financial services today, all of you keep too much of your money in your brokerage account and too much of your money in your savings account just for opportunity or pay bills. In the future, 10 or 20 years out, your money will take the money market fund. Your money is working for you up until you spend. Money will come out of the system. It'll be immensely disruptive to traditional financial services. We see that coming. These are long journeys, but very, very disruptive, just like what happened to the newspaper industry. I see it happening to financial services, and I'm happy that WisdomTree finds itself amongst the early players here.
Well, I really appreciate your perspective, the work you're doing in this space. Thank you for being with us today, and thank you for being a leader.
Well, thank you. Pleasure, everybody.